Blockchain technology extends beyond cryptocurrency, offering decentralized, transparent, and secure systems for various industries. Unlike traditional databases, blockchain records transactions on a distributed ledger, reducing the risk of fraud and single points of failure. Decentralization enhances security and transparency by preventing any single entity from controlling the network. Smart contracts automate processes by executing agreements without intermediaries, reducing costs and errors. Real-world applications include supply chain tracking, digital identity verification, secure healthcare data management, and transparent voting systems. Advantages include security, efficiency, and data integrity, while challenges involve scalability, energy consumption, and regulatory uncertainty. Understanding blockchain's broader potential prepares investors and businesses to navigate the evolving digital economy. Its role in automation, security, and data management signals its impact beyond speculative markets, shaping industries that require trust and efficiency in digital transactions.
Merav, you've said AI stakes, blockchain authenticates. Can you share how you see blockchain providing trust and transparency in an AI-driven world?
Yeah, exactly. With the hype of AI at the moment, everyone is fearful that everything is fake, especially with the deepfake. But there's a lot of other things like the bias and hallucination and everything else. But just think about the deepfake issue of that. When you see a photo today, you always ask yourself, is it real? You see a video, is it real? We have seen, incidents with whether it's celebrities or politicians or anything, that they were fake. And we know, and there are also scams that have been, and in fact, it's been, a boon for criminals to use the deepfake, for expedite, the scams. So yes, as I said, AI fakes, that's what it can do. And with technology that advances, it can do it even better than ever. And it's going to do it even better and better. But so we need some authentication. We need to understand whether this is true. Am I looking at the real thing, or is it just someone trying to hallucinate me? So, and this is where blockchain comes into play, because blockchain, the whole idea of blockchain is authentication. Whatever you record on the blockchain cannot be erased. It is there forever. That's what we call it, is immutable. So whatever is going to be recorded on the blockchain, going to be recorded. This is and you can record, like a smart contract with all the information, like an NFT, with all the information. So every let's say photo, audio, text, anything, basically anything that you can imagine, even this video, can be authenticated on the blockchain. Now, it's just a pointer. It's not like you see the video. It's not that blockchain is not a database. So I want people to understand that that's not the purpose of blockchain. It's a pointer to where the data is, and this is where you can find it. Now, but you're going to point, to this information. It is immutable, meaning you get all the records of who put this information, when it was put, there's a timestamp, and cannot be erased. So it is authenticated. So you know whether it's true or not. You know who is the owner, who has done it, and whether you can trust it. So
true authentication. Exactly.
So, and we need it today. And I advocate that everything, I know that the companies, the tech companies, they're not really, excited about doing that, because, it's part of the business, but I'm not going to get into, maybe I'll get to that later, but I advocate that each and every applications will have this immediate, and it's possible. I know that some startups are working on this, and it's possible to authenticate everything that you can imagine, even the models themselves. When you build them, you can authenticate, the data that has been uploaded to the model, the training that has been done, the revision of the model, the algorithm. You can authenticate everything, the entire what we call the flywheel of the process of development. So it's something that I really feel and believe that this is where we're heading, because there's a need for that. Everyone understands that we need that to verify and trust the models. We need that in order to trust. The users need to also, the developers need to have trust in the data that has been entered into the model and the algorithm that hasn't been hacked or all kinds. We've heard about that as well. So also, when we're talking about models, sorry for that, is that basically if you're giving authority only to, let's say, several people who are developing the model, and with blockchain, if you're going to prevent that people that are criminals or hackers or etc. cannot enter the process and I don't know change anything within the model, which is very important because we have heard about things like that. So there's a lot of things I can talk about for hours. It's really important that now that we're entering into this era to have blockchain as a key component for all this trust issue.
Thank you. I want to go to John, because John, you're known for making blockchain simple. You explain blockchain to somebody who finds it intimidating or overly technical.
I'm going to give you the world's easiest explanation of blockchain. You ready? You ready, Andy?
Yep.
Okay, imagine a Google Sheet, or like an Excel spreadsheet, a Google Sheet. But instead of being stored on like Google servers, the spreadsheet is stored on many, many computers all around the world. And imagine every time you make a change to that spreadsheet, it's automatically copied to all the copies everywhere, all over the world. And then every time we make a change to it, we store that data in a chunk called a block, and then we chain them together, hence blockchain. That's it. That's all you need to know. So there are many uses for this technology, for blockchain technology, but the big, hairy, audacious success story unquestionably is crypto, meaning financial assets using this technology, such as Bitcoin and others. And so that is now a $4 trillion asset class. And that is the opportunity for your audience, who I know are interested in financial planning and lifestyle planning. That's the opportunity to invest in for the future, is buying just a little bit of these crypto assets that are based on this blockchain technology as kind of a vote in the future of the global financial system.
Chris, at Bitcoin IRA, what were the biggest challenges in convincing people and their advisors to use blockchain for retirement investing?
Well, we don't. You can't actually invest in the blockchain itself, right? You're doing it via proxy, via crypto, because as John just said very perfectly, the only thing he missed is the authentication that Maeve was talking about is done by a consensus in users that are putting their nodes out there and they're authenticating transactions, no matter what chain they're on, and that could be the Bitcoin blockchain, the Ethereum blockchain, etc. And so for us, I mean, honestly, I always joke about the first time we did it, we put a press release out and said, hey, we've created the first Bitcoin retirement plan in 2016, June of 2016, about a decade ago now. And your early adopters were probably folks like on this panel. I call them my engine nerds. They were hyper excited about being on the cutting edge of things. But what's happened since then is there's two factors that really drive people into alternative assets. There's fear and greed, right? Fear is that concept of worries about our fiat currency and the things that are happening. And greed is the waves that we see like in 21 and even 17, 18. And we'll probably see another wave of that here in the fourth quarter. Just quick thing I wanted to share. I love what Maeve said about authentication with AI. I do think that Bitcoin, cryptocurrency, and AI are in a perfect harmony for an amazing marriage ahead. Here at Bitcoin IRA, we actually call all of our clients on their birthday of their actual birthday, and we also call them on the anniversary of their account. Well, we're now up to about 250,000 users, so that's about 500,000 phone calls, which would have taken a floor of people in the past, and we use AI callers in order to have those conversations and wish them happy birthday and remind them of things coming up. And one of the things we just did in phase 2 is we started rewarding the AI agents with components of an actual token that was their compensation for what they were doing, and and basically rewarding certain things. And we put them in competition with each other as well. And so we're just, I think, honestly scratching the surface of this marriage. And it's going to be so exciting over the next year and a half, because it will be accelerated. This is going to take a lot less time for adoption than we say for the internet was, or even for social media was, because AI is a driving force of it. So just really cool insights from both the other panelists so far. But yeah, it's always a challenge to get people to the table, but that's what we're excited about. That's our advocacy. That's what we're here for.
Great use of AI. Nick, you founded the first physical Bitcoin exchange. You came to this early. That was back in 2013. What did you see back then? And from a protocol standpoint, what excites you most about blockchain's potential today?
Well, yeah. So, I opened the Bitcoin Center in 2013. I was involved before, of course. I worked for Dr. Ron Paul, who ran for president a few times, and he spoke about competing currencies all the time. And when the time came, we all adopted. And I think the technology back then compared to today is more robust, of course, and many more people are adopting it. So let's say, if you're going to do an analogy with the .coms, there was a time in the beginning of the .coms that, you had pets.com, you had this, you had that, and everyone was just excited with the word .com. So, but then everything collapsed, and I think we had that. And from my perspective, we had that in 2017. Now I'm not sure what's going to happen now with the stock exchange, of course, and all the treasuries, digital asset treasuries. But I think that it's an incredible world. It caught me by surprise. I thought it was going to take a lot longer. I mean, that's why I opened the place next to the stock exchange. I tried to rent a booth in the stock exchange. In 2012, they laughed me out of there. And I said, "Oh, I'm going to open my own exchange next door." And, that's what I did as a publicity. It's not a publicity stunt, but I wanted to give visibility to the transparency of the blockchain to the financial world. And, we trained and all the traders who were losing their jobs due to high-speed trading and stuff like that. And we stood outside of the stock exchange and sold Bitcoin in the street, especially when they were all getting, after the closing bell. And then we'd bring them next door and give them free Bitcoin. It's a lot of them. And train them how to trade. So I think we did our part as activists.
That's real guerrilla marketing.
Nick,
Merav,
you are an OG. That's so impressive. 2013, you were doing this.
Well, yeah. I mean, we've been fighting the Federal Reserve for a long time. I think I started in 1991. So this is just the continuation of the battle.
I'm shocked we haven't crossed paths, Nick. Every time I'm in New York 4 times a year, I speak, I go and do interviews at the stock exchange, which it's kind of a cool experience, especially as a history buff like myself. There's so much history there. As far as, I was going up the back steps and I'm like, I wonder if this is somewhere somebody was in 1929 and the smell of it and everything. And also my Bitcoin. That was my dark. Yeah, that's where my dark humor went too. But I also I was on the Coloradans for McCain campaign back when we were running against Ron Paul for that. So I'm amazed we have never crossed paths.
Yeah, you're lucky.
You're lucky. You guys will have to connect next time you're in New York.
I think that things have changed for the better since your experience in 2013. You said, that you opened it just next to NASDAQ, and probably NASDAQ, back then, probably threw you away and said, "Hey, you scammer, move away from here." But today, they just applied for, to move everything to tokenization. They're going to tokenize all stocks. So they are moving everything to the blockchain, NASDAQ itself. So things have changed. I mean, life has changed. I mean, it's like a complete evolution. I mean, yeah, it takes time. That always happens with technology. Nothing happens in a day. There's always, the first it starts with the hype, like the internet, and everyone wants to try something and think that everything has to be on the blockchain. And then because of this hype and because of all the fiascos and everything, so people just throw what, as I call, throw the baby with the bathwater. So we don't want to hear about that. Forget about that. Everything is false and crap and everything, which is not true. I mean, technology, we know that it has substance. We know that it has value. We know what it can do. So the issue of tokenization, I think it's coming, and it's coming really, really, really hard. I believe, I mean, I've said that many, many times for many, many years. I believe that everything will be tokenized. Everything that you can imagine, even this video can be tokenized. I mean, you can monetize that as well. But apart from that, to your point, Nick, is that the big financial institutions are already in. I guess we're starting to get some clarity from the regulators. We have the Genius Act, for the stable coins, Clarity Act. By definition, clarity, it's on its way, and I think it's already been approved by the House. So we'll see it sitting now on the Senate with the Senate. So I think that's going to. I'm predicting that at least at the very least, I mean, it's going to be approved, by 26 for the most part. But now for your point with what the financial institution and everything, we know that JP Morgan partnered with Coinbase. Coinbase is crypto exchange. I'm sure that people at least people here are familiar with who is Coinbase, and which is an exchange probably similar to what you have done in the past, Nick. But it's a bit more regulated. But so they partnered with them because now they're going to launch their own what they call JPMD, which is a commercial deposit. It's kind of like better than stablecoin because it's also yield, have some interest, yield interest and return on that. And it attached to a commercial deposit of the bank. And hear that they do have their own private blockchain, which we all know. They start with Quorum, then they call it Onyx, and now it's Connexus. But they're not launching it on the private blockchain. They want to be exposed to the entire public. So they're launching it on a public blockchain, which is layer 2 to Ethereum, which is the blockchain, Coinbase blockchain, which is called Base. So they're in. I mean, it's a different time.
It's a shame.
I know it's a shame because
they threw me out of the bank. They threw me out of the bank in 2014. 12 banks threw me out just because they heard Bitcoin or something. They threw me out of the banks. JP Morgan and Morgan Stanley yesterday asked me to invest with them. And I said, you guys threw me out of the bank and now you want me to invest with you? I mean, it's pretty shameless what they're doing. They should stay away from us. I'm just joking. But, they pushed, Cuomo was governor at the time and he was getting a lot of donations from the banks, and he put Ben Lawsky. He put Ben Lawsky in charge of the DFS, Department of Financial Services. And Ben Lawsky was a litigator and he was his chief of staff. He had nothing to do with banking. So he went after the crypto companies and he chased the whole industry out in 2015. He made the BIT license. We applied, spent so much money just to keep the what was it called? Safe Harbor alive. Mm-hmm. And, there's 30 licenses now, 10 years later. What kind of license is that? That's like that's an insider license. And at first there was only one, and then there was two. It was very bad what they did to us. Every resident of New York should sign up for a class action lawsuit against the guy because, and if you weren't in New York, you could buy a bunch of crypto everywhere, and it was pretty easy. But if you were in New York, you had to hunt down one company. If that company blocked you, you couldn't really buy any crypto. So I think there's a class action lawsuit there. I'm going to go sniff out for a lawyer today. Come to think now that I thought of this, I'd like the truth to be told that the banker kept us down, chased crypto overseas, and made every resident of New York not see the advertising of Bitcoin, not learn about Bitcoin, not be able to buy it. So,
and it wasn't just New York. We fought tooth and nail to get into New York. Hawaii had problems too. And then there was the era of 2018 where I had to bring in multiple chief compliance officers and general counsel because we couldn't even advertise our business anywhere in America on Google, Facebook, Meta, LinkedIn. Today, LinkedIn still doesn't allow advertising for cryptocurrency companies. When the pendulum has shifted, right? They went very hard one direction of anti, and I think Nick nailed it. There was a lot of people with their pockets being lined by big banks, and that's what happened. This isn't the first time.
Cuomo happens to be trying to run for mayor.
Yeah, exactly. And this isn't the first time. If you look back
already, I don't know what he's doing.
If you look back at silver with JP Morgan too, they paid over like $3 billion in fines for manipulating the price of silver while they were buying it. One of the things that I really love, and I want to get this across to the audience for Andy, because I know this is the last of the shows about cryptocurrency, is I've always been a strong proponent of the fact that Bitcoin and cryptocurrency is the democratization of money. It is the people's currency. And I think that is, if we continue to hit home with that message, as we continue to expand our products and bring in more adoption. We're only at 1 or 3% of adoption right now. JD Vance said there's going to be 100 million American households that hold crypto by the end of the decade, and I think that's all our job is to stay that course and continue to carry that message forward. That one of the things I love about this, I've been in financial services for most of my career, and the house normally wins. And with cryptocurrency, the average Joe and the average Jane are actually making differences in their lives by being a part of this. I would almost want to say revolution of monetary policy. It's very exciting. Would you guys agree?
Thank you for that.
I definitely agree with Chris, about the democratization, because that's why I got into this, because of the it really has the power to democratize society, and also AI, in fact, and the combination of them together can do a lot of really great things if we really understand what the ability of these technologies. And as for I have different statistics. I have a survey from Fidelity that's saying that 26% of retail investors hold digital assets, and about from globally about 56% of institutional investors hold digital assets. So the numbers are higher, and they're getting even higher. So
thank you for that. We have a lot to cover, so we're going to go to segment 2.